Hello everyone, thank you for clicking on this video. This video is just going to be a quick one just to go over trend lines. There's a few people that kind of don't understand the gist of it. There's a few questions and points that I want to go over. So I'll just quickly just jump into it. So just on a random pair, so pound JPY, and I'm on a 4-hour candle time frame. So with drawing trend lines, what I typically do is to go back in history and test it yourself. So try find some examples for you to draw. So what we'll do is so we're currently here. We'll go back a few. So we'll start at the 2019 point. So let's talk about just what we can see right now. So what I've done is just got rid of everything in the front. So what I typically do for trend lines is obviously we need to understand what makes a trend go up. So for example, this right now is the uptrend, but let me just break it down why it is. So the market moves up in trends and consolidation. So they're the two types of movements in the market. So the trend, as in this example, is where you get a high and then you get a low. Then you get a high which breaks this current high, and then you make a low again. But it doesn't really exceed, it doesn't come all the way down here, breaking this low here. So in order for it to be valid, it has to basically come to make new lows like this, for example. And then it repeats the process, so making new higher highs and making new higher lows, and then the reverse is exactly the same for a downtrend. Okay, so I'll leave that there for now. So let's just put this into perspective with this example here. So we could say that just from looking from this point onwards, we'll say that this is the start. So we can see how price moves up and then it goes down as the low. So this would be this structure here would technically be our high. And we can see that price comes down further, so then this would be our low. So like this, and then the price basically continues to do this. So we get the break up here, and then it's making higher lows, higher highs, and high lows. It's interesting that we can see this pin bar as well, which touched the low. So this is something that I think few people do get confused on, is because they see this pin bar and it's touched the lower lows. I never take that into a consideration in terms of the overall trend. What confirms the overall trend change is if this pin bar, if it was to actually close below, so like a full body, and not be a thin bar. So if it was to be fully closed, so like if this was down here, then it would probably consider to me that the trend is changing over. So for this example, this is simply ignored, and we can presume that the trend is still currently moving upwards. So as we continue going higher, we are making newer highs, where I'm labeling off this, and like I said, we're getting higher highs. So let me just get rid of this and this. Now, so this would be interesting to see what happens now. So we can see here that the highest low that we technically made was here, and now we're starting to see some. I'll draw it in a straight line. Now we're actually seeing some closings of the higher lows. So as we can see right here, so this would be a warning sign, for example, for us to say that something perhaps is changing. So the momentum may be changing in the opposite way. and we got this full confirmation like this way. So price came down and closed well below. The more significant these lows, each time the each time the price goes lower and closes below these new lows and the higher lows, it adds more bias towards that the trend is changing. Instead of going up, it will now change downwards. So that's the whole momentum of it. So I won't go too far and too deep into further details. So let's just go ahead and quickly just show how I would typically draw this. So what I do is draw a general trend, just see where things up, and then what you want to do is to get all the touches in line with each other. So we want to get at least a minimum of 3. So roughly you've got 1 touch, 2 touch, 3 touch, 4. 4 roughly around here, and then this is the what I do is I do the 3 touch rule, and then I do the overextension trend as well, which is basically getting the absolute lowest point and trying to make them all touch. So for example here, roughly around this. So as you can see, what happens when when you draw something like this. So let me just make this a bit better. So you can see how we have the touches here, 1, 2, and then we got just a blip over there. So you get like this pin, you get like a crossover forming, and when you start to get this crossover forming, if you notice where it coincides, so if it makes like a little X, this makes like a little cross here, and what this means is it's giving an indication that momentum may be able to switch over. So that is where we need to put a hold on the bias of the overall trade. So this gives me like a pre-advanced warning as to if the trend is going to die out. So therefore you would want to add all your little momentum indicators to put on top of this to see if there's enough steam in the trend overall to confirm that. So that is basically the overall of how I draw a trend. So we have, I'll change the color to be honest, change it to blue. So this is just, so the trend in blue is basically the one that touches the actual price action by a few points, so like the minimum of 3. And then you have the overextension trend tool, which is where you get the absolute max lowest point in considering this is an uptrend. Get the lowest points, and we try and draw them and connect them accordingly, and this eventually gives us the overextension tool of the trend. Now, another question that I have as well that I want to cover is what time frame should I be drawing these trends? And you technically can draw it on any trade. You can technically draw it on any time frame. The only problem is the lower you go, the less significant it becomes in terms of the ability for price action to break and close below the trend, and then a lot of confusion can come into the overall picture. So the best method is to actually start from the month angle and draw the trend properly in this way. So if we had a look at what month was we on, the 2019, so you'll slowly start to see how this would play out. So let's just say we have the overall downtrend like this. So just looking at these few here, so this would be, okay, we'll draw the overextension one first, just because it's a lot easier to see. And then to be honest, the lower you go, the month is a bit harder to find the true price for this pair, but sometimes it's better to see on a lower time frame. So typically it's better to go from month to week to day to 4 hourly. They're your proper trend tools, and you can see how when you take it down a week, you'll see exactly where the price is gonna go overextend if it needs be, and then take it down towards a daily, and it's much more specific towards the pin to the T of the actual price action. So we'll take it down one more once again, and see how the overall trend is technically down from the weekly to the daily, and we found like this is the bottom of the low, so we made all the way towards the top, and we technically consolidated sideways before we got the further push. So looking upon that, the overall strength of a trend line is much more stronger on a high time frame as opposed to a lower one. And then how do you trade from this? So how do you trade from trend lines? So this trend lines can't just be taken just based on what you're drawing. So there's a lot of other things that you need to include. So for example, price action, sentiment, all the fundamentals behind the news. What else? What the best way to take action upon this is to include some other rules. So in in terms of that, what I mean is to involve an indicator which can help you signify some turning points. So perhaps a MACD, an RSI, Bollinger Bands. They're all good examples, and I'll probably do a little video on each one, covering how to take advantage of all these indicators that we have for free on TradingView. So what I also would recommend is obviously back testing, and I probably will do a video upon that. But going back to the point of how to trade with it, yeah, you need to have a strategy. So for example, when, as we can see here, price has actually broken the trend line on both my overextension and the price action trend line. So how do we know now from here to take advantage? How do we know that we need to go lower? So this is where you need to have the set of rules in place, which you need to do your own research for, do your back testing, which is very important, and see what happens at an indicator at this specific point. So this would be a very important point for yourself to look at. And then what you would do is to find how this operates is to check your RSI. So for example, I'll get mine out here, and perhaps it would be the an RSI divergence. So this simply, you have divergence here and up here, and then perhaps you're waiting for a bullish engulfing candle and a confirmation of a complete close of closing below the overextension trend line. That potentially could be your entry. I mean, what I've just said, you need to test that. So what you would do is to go back and redraw all your trend lines a few times and see what happens at these scenarios. So go back over the data, and this is unfortunately the hardest part and the boring part of trading, but it will pay off as long as you are consistent and you track your things very well. So yeah, that's gonna wrap it up for this video. Just in the link below, in the description, I'm also thinking of making a Telegram group chat just to show you how I perform on my trade, so you can have a look at that. It's completely free, so go ahead and get yourself joined in on that. Just started it today. I also have Twitter as well, if you want to follow me on that, Instagram. And yeah, so if you like more sort of videos like this, please subscribe, comment, like, all the good stuff, and I'll see you in another video. Thank you.